Good afternoon, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the last week in mortgage today, our weekly whirlwind through all the latest news and pertinent updates to the mortgage industry each week. I'm pleased to be joined by one of our lender members as my co-host, and this week back in the co-pilot seat, the Chief Mortgage Officer of Green State Credit Union, Ryan Doehrmann. Ryan, great to see you, man.
Rich, good to see you, buddy. I missed you. I had to back out of Miami at the last minute and it killed me. So I feel bad about that, but missed all you guys. And but the next one's in Chicago, in our backyard almost. So we're going to bring a whole crew over to that.
I'm excited because, when we're in the middle of the country, it's easy, it's so easy to get to Chicago for so many people, cheaper flight. And so, yeah, we're expecting big attendance. I know you guys just made a nice little expansion in the Chicago area as well. So it'll be nice location for you guys for the TMC September event.
Yes. Chicago's not Miami, but so again, it's bummed out, but no, looking forward to that. So good to see you again.
Good to see you. And let's go ahead and get into it. And as always, any comments, questions, thoughts anybody has, go ahead and pump them into the chat or the Q&A, and we will incorporate them into the show. Ryan, hard not to start with just the rate climate. It's beating a dead horse at this point, but rates just keep going up, and it's just causing a lot of uncertainty in the marketplace. If it's with mortgage lenders, if it's with people trying to buy a house, because rates and values just kind of keep going up. And there's a lot of just uncertainty related to inflation, the geopolitical climate. And I think I saw a survey somewhere today. It was just consumers, but it was prospective home buyers. And I think their anticipation was that 30-year fixed rates would be in the mid to high sixes a year from now. And that's the consumer. So it's different from those of us in the industry. But what I think it spoke to is just a lot of uncertainty right now as it relates to real estate and real estate finance.
Yeah, it's really all over the board. And this is where, as lenders, we have to, it's been easy, right? The last 2 years, no disrespect to the actual people doing the loans, but it's been easy. And this is where this market, we'll see, what we're made of. And really, it's about becoming a trusted advisor right now. You're right. We're having to spend way more time with borrowers and kind of coach them through this, because this is new to them as well. And we hosted a huge home builder association event here at Green State last week, and there was a bunch of realtors and builders here. So I was talking to them. It's good to get face to face with those folks and see what's going on in the market. And I really feel bad for the first time home buyers, right? They're the ones that everything's go, right? We're trying to get offers in. There's 10 plus offers in. Everyone's worried about what rates are going to do and what prices are going to do throughout the summer. So everyone is having to move quickly. They're having to waive appraisals. They're having to waive home inspections, which really worries me a little bit, especially for these folks that maybe don't have as much cash built up, in case something happens. But it's something where we're working through. We're down big, just like everyone else. I was at a couple weeks ago at an event with a couple actually IMB folks, and they were going on how far they're down, and we are as well. Thankfully, and some of my commentary is geared towards the community bank and credit union area, but that's where our portfolio lending has actually helped in our markets, because we're able to offer, so we're sitting on a bunch of cash and liquidity right now. We're able to offer a lot lower rates. And so, I looked at our lock schedule on Monday, and, we had 200 and, I think about 230 locks just last week. 5 of those were secondary market. The rest were all portfolio. Now that presents its own problem, right? It's so weird. Last year, the last 2 years, we couldn't grow our in-house portfolio at all. It was all secondary market. I'm getting, we like the SRP income, but hey, as a credit union, we and our mantra is we want to grow, and to do that, we need to grow our own in-house loans. And so I'm getting not yelled at, but hey, what do we got to do to grow in-house lending? I'm like, well, rates got to come up a little bit. And now we're at the opposite end of the spectrum. And now we're like, hey, where's all this SRP income? And we're doing too much in-house lending. So it'd be nice to find a happy medium with that. But thankfully, the portfolio in-house stuff has saved a lot of our borrowers because they're jumping to those loans.
Seems like the pendulum never stops in the middle in the mortgage industry.
Mhm.
Always one extreme or another. But you make a bunch of good points there. And that was my background, was running lending for community banks for a bunch of years. And I used to, like you just said, like these climates present opportunity. And the smartest members of ours I've talked to, that's the way they're looking at this climate. Is you have periods of extreme volume, or in this case, things have really dropped off a bunch. Good lenders, that's where they pick up market share. And our depository members, a lot of them, like you guys, really savvy lenders, some big advantages right now because you can do that portfolio lending. I mean, you're an independent mortgage bank. It's really tough to find viable outlets in the secondary market for stuff like ARMs, certainly construction lending, other niche products that are becoming a much bigger piece of the pie right now.
Yeah, and it's a good point because you mentioned we have an acquisition that hopefully is closing in July with a community bank in Chicago that actually has a subsidiary independent mortgage banker attached to it. So Blue Leaf Lending. So looking forward to those guys joining our family. But right now they're referring over deals if they can't get it to go secondary market for whatever reason. These are great deals, 20% down, 800,000 loan amounts. And for whatever reason, you name it, it gets kicked from the secondary market. They're referring it over to us and we're able to put it on our in-house books pretty easily. So that's a nice product to have for us. But too, in our, before we joined live here, that also can pose an issue. We're such a strong lender in our commercial and our indirect lending. We're throwing a lot of in-house loans on our books right now, and we're needing those deposits. We're needing to be able to go borrow from the Federal Home Loan Bank. And I know that we're going to talk about the Fed here too, and raising rates, and that poses a problem too on what we can go and borrow our money to lend out. So we just had a meeting yesterday with our ALCO committee trying to balance out all of our lending and our deposits. And it's we've been lucky for 2 years with everything. Not all of our business units have been hitting the ball hard, but now we all are. Now we're all fighting for that all those deposits and all those funding. So it's sort of difficult to balance, but we're doing the best we can. And we need rates to go up a little bit in our market. I know it's weird to say that for our in-house lending because we're still too low. But when you have all these big banks and credit unions setting all this cash, you can afford to do 3.25, 3.5 on in-house lending right now. And we're needing that to go up just a little bit to try to get a little bit closer to the secondary market. But that's where you're seeing a lot of our home buyers in our markets jump to, is in our 5, 7, and 10-year ARM loans right now.
Yeah, the latest MBA application data, new batch is due out really soon here. Expect the numbers to go up even more, but ARMs were 7.5% of all new applications. My guess is the same report we'll get here tomorrow or the next day. We'll see ARMs at 10, 11, 12% of the total market. And it's, like you said, it's, a lot of times at a depository, having different business units, having different business goals to manage can be frustrating for leaders on the mortgage side of a depository. But on the flip side, when you get in one of these kind of climates where mortgage volume is down, to your point, a lot of times that means the other divisions of the bank are ramping up. That's doing good things for the institution. That's going to help the mortgage division in the short and medium term.
Yeah, and you say that about ARMs on 7.5%, 8% of the applications. With us, and I'm sure a lot of our credit union bank peers can attest, I'd say, the last 2 years, 70 to 80% of our applications and loans have been all secondary market and 20% in-house. That is completely flipped right now. So it's 70% plus are going portfolio ARMs. And, as I mentioned, it's good for now, but you can only sustain that for a certain period of time. So we'll see what happens here.
This is the last week in Mortgage Today. I'm Rich Swerbinsky with the Mortgage Collaborative, joined this week by Green State Credit Union's Chief Mortgage Officer, Ryan Doehrmann. Green State, Iowa's largest credit union, one of the biggest credit union lenders in America. Really fascinating company that operates a very savvy mortgage operation inside a very healthy and well-regarded credit union in Iowa, and a great member at TMC. And Ryan, one of the things that this run up in rates and this run up in home values has really done, you talked about it at the outset of the show, it's really made it tough for the first time home buyer. Those borrowers on the fringes, it's, widened the gap between the haves and the have-nots, not only in real estate finance, but in America. It's even widened the minority homeownership gap, which has long been a problem in our industry. And I know you guys are doing some really cool efforts in outreach at Green State, investing a lot of money and a lot of time and a lot of energy to try to do your part to help bridge that minority homeownership gap. If you could tell us a little bit about that, because it's fascinating.
Yeah. Before I jump into that, you talk about affordability just for first-time home buyers and everyone. I saw a chart on Twitter, and I follow a lot of these mortgage accounts just to stay up on the information and whatnot. But I saw some crazy stat, and this was again 2 to 3 weeks ago. Back a couple weeks ago, it was the greatest increase in mortgage rates from a 3-week period since like the 80s, right? And it was also, these were when rates were sitting at 4.5. It was the same rate environment as it was back in 2013, right? So same interest rate, but housing has gone up 90% since the same time period, right? Well, that screams affordability issue for folks. Now you're seeing a lot of people with cash, right? Making cash offers and moving to more affordable markets. People that, if the houses aren't appraising or there's issues, or they're sitting on this cash to help that. But a lot of folks are getting squeezed out, and it is a concern in our markets and in our real estate communities here. So I just thought that was a fascinating stat that really stopped me in my tracks when I read that a couple weeks ago, and I'm hearing it from realtors and from some of our lenders that are on the grounds talking to the borrowers each day. But you mentioned, I think it might have been last year at this time when I was on, we just had spoken about our $500 million commitment to help bridge the racial homeownership gap in the state of Iowa. I've been on record saying that that's truly embarrassing for our state. I'm sure we're not the only ones that have this issue, and we could speak for an hour of the reasons that go back in the 40s and 50s with redlining and all the other past transgressions that have led us to this. And so, we were just kind of feeling it out and trying to develop a product that was compliant, that met all the fair housing guidelines and laws. And we finally feel after a year, we're there. And now with our expansion into other states, our CEO and our senior team have doubled down those efforts and have doubled that to $1 billion in home loans to people of color. Okay. And I know there can be all sorts of questions on this, right? It would take about 20 minutes to kind of explain all the logistics of this new program, but we run it by everywhere to make sure that we're doing it properly. But bottom line is, we're focusing sort of on those census tract areas in all of our major markets that need the most, that have the most need, right? That have historically been underserved, right? And we've taken some shots from people from the outside, like, hey, how can you be lending money based on people's skin color? And it's not about that. It is about making everyone aware. Hey, we're the credit union that has a special program that's going to look at this and really provide education. If you qualify, all right, you're good to go. But if for some reason you don't, all right, we're going to provide on our dime the home buying education and counselors so that if 6 months to a year, maybe even takes 3 years down the road, we're going to help you get there. So there's a lot of education in this, but we're really not doing this to kind of tote Green States and toot our own horn. We need others to join us, and we're going to start here in Iowa. And we're hoping our peers join us in this fight. And let's collaborate together. Hey, TMC, we're all about collaboration, and that's what we're all about too. And we want to get like minds together. And I just talked to the Iowa Association of Realtors yesterday. They want to partner and bring other lenders together, and let's put our heads together and figure out, here's what our program is. It might not be the best, okay? Might not be the best, but let's get some ideas going and really tackle this, because we always talk about it, right? We all talk about fair lending and all the issues that go on in our industry, but there's not a lot stepping up. And so I think we're stronger together, and that's what we're hoping kind of start a little movement, at least here in Iowa, and then hopefully expand on that and grow from it.
That's a great update. And yeah, congratulations to you guys for really putting your money where your mouth is and looking to make an impact in your home state. And because there's a lot of right now with housing in America, it's been a couple of great years for the mortgage industry. It's been a couple of great years for people that have owned homes with the equity run up, but there's a lot of problems right now in housing in America. You hit on a bunch of them right there already. The minority homeownership gap, the lack of affordable housing, the lack of supply in general, and there's no magic wand for any of this stuff. Tough problems like this require creative, difficult solutions and programs, and it requires leaders like yourself and companies like Green State by going out there and leading on the issue. And to really commend you guys for what you're doing. Any way we can help TMC, you are right. That is almost precisely what we're about, is taking a great idea to tackle a tough problem, getting some other smart people and smart lenders involved, and sit around the table or the Zoom Brady Bunch screen and figure this thing out. So
I challenge people too, Rich. It's easy for us and some of our senior leaders and me to get up here and talk about this as a 40, I don't know how old I am anymore, 43-year-old white guy. Okay, let's just call it. Let's call it what it is. But we have gone out and have hired a DE&I coordinator, actually from the University of Iowa football team, to come in and help run those efforts from us. We hired a bilingual business development director, Kenya Calderon-Cerrone, who has led our efforts in the Hispanic and Latino community, and has totally, guys, I'm not kidding you, has totally transformed our thought process and how we want to reach out to that community in our own state. She has been a godsend to us. She's a good friend. And then recently, for someone in the Black and African American community, business development director, Lindsay Kennedy, started with us last Monday. And she is just a wonderful person. It's going to help me lead and hopefully take over this project and make some difference. Make a huge difference and get others on board. So I challenge others to look in the mirror and what positions can you hire and what people can you bring in the door to make a change, because we tried this in the past, but we need others to help us and where are our blind spots at, so that's been a big win for us, is getting those folks here at Green State to help lead the charge with it.
Well, kudos to you guys, and I commend all in attendance here live, and those of you that will listen to this on podcast and on YouTube after the fact, to do your part, get involved. We at TMC, we have a working group that has been around for about 5 years now, called the Community First Working Group. Green State, many other members at TMC, they're community lending specialists, get together once a month to talk about granular solutions and things that are working for them and ideas that they're forging forward with to try to move the needle in their respective communities. And Ashley Alexander from our team, who moderates that group, just dropped the link to our Community First Working Group in the chat here on Zoom. So would recommend all get involved. It's a great group that has been doing some great things, and you guys have been a big part of that, Ryan. And again, just kudos on your efforts in this arena, and look forward to helping in any way we can, and keeping abreast with all the developments with what you're doing, because it could hopefully start a trend, a much needed trend in our industry.
Yeah, and I've seen other people talk about this too, right? There's a lot of people that know about it, and it's just finding the resources and working with the right groups, right? I love that Ashley posted that in the chat, that there's a like-minded group out there that's talking about it, and there's others out there as well. So, right, can't solve it on ourselves by ourselves, and looking for some help on this and for other ideas. So appreciate it.
Awesome. Home equity lending, Ryan, you guys got to be seeing an uptick in there, right? All these people locked in the 30-year fixed rates and the twos that maybe can't buy that step-up house and want to go to work on the existing one.
Yeah, so we actually have creative. That's where you have to get, as credit union banks, you have to get creative in some of your in-house products, and we've there's a need out there for renovation loans, and we can get creative in what we do in our portfolio, and make it actually a first mortgage product, and bring it to our side of lending. But it's funny you bring it up, because I had to have a couple conversations with our folks that lead our retail division, because we have a kind of a free in 10 and free in 15 quick mortgage out there that's a retail product. Well, that was priced way below our 10-year fixed and 15-year fixed secondary market loans, and so they were stealing a lot of business from us. So we had to have some tough conversations. I said, how about I take over setting those interest rates for you? But yeah, we've got some home equity loan specials that are just dropping here soon, that will kind of identify those borrowers that are looking to making home improvements, right? And I think we're seeing that too with everyone that's locked in on these low, 2.5% interest rates. They're, unless they have to move, they're not moving. They're wanting to do home improvements. So it's either home equity loans, or like I mentioned, we've got a good construction loan product, and we've tweaked that a little bit to make it a renovation loan, whereas we can close it in our area and be a little more flexible than our retail lending can. But we're seeing an uptick in that. We've had to kind of go in there and tweak some guidelines to make that more relevant to what we're facing with today.
Yeah, and good point on the 10 and the 15-year stuff. Rates have run up a little bit now, but if we get a little bit of downward action on rates, which I think I'm expecting more than a continued ascent, there's an opportunity to refi some of those 20 and 30-year fixed rate people in the 10 and 15-year paper, keep their rate maybe about the same. All this equity that they've accumulated over the course of the last few years, maybe they're in a position to do that financially. And another good refi area of opportunity, when you read all the news stories about, refis are gone and dead for the next 10 years. So
yeah, that's a good point on the cash out. So we did create, we've always had it, but we just haven't marketed it. Is we can go up a little bit higher on cash out refinances. Now we want to be careful, right? I'm a tad worried. I think everyone is, right, on the appreciation values across our country. In Iowa, we don't see it as much as the coast and other areas, but we're still seeing a lot. And so we're careful with how high we're going, because at some point, we were doing 100% home equity loans on a retail side, and I got together with a couple and like, we might need to rethink how high LTV we're going to be going up to, knowing how quickly these home values are going up. So, but we now are marketing, our own portfolio cash out refi, where we can go up a little bit higher LTV than you can on the secondary market, and we're seeing some good loan opportunities from that.
This is the last week in Mortgage Today. I'm Rich Rubinski with the Mortgage Collaborative, joined this week by Green State Credit Union's Chief Mortgage Officer, Ryan Doehrmann. Ryan, Fannie Mae made some news last week, announcing that they're going to start accepting attorney opinion letters in some cases, as opposed to title insurance. I know Iowa is an attorney opinion state, correct?
We are. It's actually, it was good. Last week you had Katie.
Katie Klaus, yep. Mm-hmm.
Yeah, she was on. She even mentioned that. I was proud of her for throwing out the state of Iowa. There's not too many people that know that, but we are either the only or one of two that still do abstracts and title opinion for the title search. All right. And we have a statewide title, Iowa title guarantee that kind of guarantees all of those opinions. So this is nothing new to Iowa. And I'm just going to tell you, we've been doing it forever and it works beautifully. And it's actually really cheap. So, and I'm not going to get into, and I think you've covered it on this on a few of these, but it's something that we've done. We do it, we do it in abstract. If those that don't know what an abstract is, right? Thick legal history of a property. It's a little archaic in my opinion, but that's how we do it here. And it works. And when you look at, to update an abstract is a couple $100, a title opinion from an attorney, $175, $200, and then Iowa title guarantee, which backs all of that, is like $140. So do the math on that for your title fees. And that's why our closing costs are roughly, $1,500 because the title fees are so low. So
man, that puts it all in perspective. And Katie last week, she did mention Iowa. That's where it was in my brain. And she was a little apprehensive about it, saying, oh man, well, what if you have a claim on title? You guys haven't had issues, or you haven't had that negative experience if you've had any title claims or anything like that with the attorney's opinion?
No, and it's rare, right? I think she even mentioned it too, that you don't see too many issues, but if you do, that's where the Iowa title guarantee is there to back you. There's, with that purchase, it's lender's coverage, which protects us, but then there's a free owner's coverage as well. Obviously, all the attorneys have errors and omissions. That's important. I was reading up on, the announcement is that was some of their concerns is finding attorneys that have, proper errors and omissions and that know what they're doing. But the attorneys that we use for our title opinions and title commitments on our refinances are all approved through Iowa title guarantee. We make sure that you just don't go grab any attorney because they're not trained in, reading abstracts and rendering opinions and commitments. So you're really, I can maybe think of one out of 20 years that we've had major issues, but all that coverage that comes with the certificates and the Iowa title guarantee really helps with everything and keeps the cost down.
So, Ryan, just a couple minutes left. What else you got your eye on? Just as evidently it's going to be spring soon. We were talking before we went live, the snow that you had in Iowa. I'm now looking outside in Cleveland here on April 19th, but evidently we are now in the spring buying season.
Yeah.
Just curious, always like getting your thoughts and perspective just on the broader industry and anything you're looking at or it's top of mind for you as we get into the heart of the year here.
Yeah, we're really focusing on these home values here, and we're really sharpening up kind of our in-house guidelines, both in our commercial, our mortgage, and our retail lending, right? Just, you got to keep an eye on what's coming down the pike in regards to these home values and being careful. So we still offer 100% financing, all right? And I know not everyone across the country does that. Our market's relatively safe. We don't have very much DQ on that. And so we're looking at that, right? Kind of, sharpen our pencils and looking at our guidelines. And we actually revamped some of those and relaunched those to our lending team here last week in regards to the 100% financing. I mentioned our cash out refinances. We kind of used to go up over 90. We're not doing that anymore. So focusing on that, we're also trying to, as a credit union, you have all sorts of other lending areas. And so we have a lot of missed SRP income that our department usually has. The last 2 years, we've been rolling in it, right? And we don't have that this year. So how are we going to make up for that lost revenue credit union wide? So keeping our eye on that and just focusing on getting back to the basics. I think like as I mentioned at the start of this, it's been easy. It's been easy when these rates are so low, but now you've got to go back to your fundamentals of mortgage and get out and see those realtors, the ones that kept their relationships with their realtor partners and, their insurance referrals and wealth management, wherever you're getting your referrals from. If you kept those relationships, you're the one, you're sitting pretty good right now, right? And so we're focusing on training. We finally rejoined the MBA. For years we had stopped that. Finally got that finally joined them. So now that's opening all these different webinars and trainings, and we have time now to get educated, right? That we have time now to watch these webinars. We have time to reach out to our vendor partners. What's new? We have a collaboration call actually with our friends at Lake Michigan Credit Union here today about something about getting together. And so now we have, instead of running around with their heads cut off when rates are, out of this world, we have time to get back to the basics and talk, collaborate, and learn what's going on and what's working in other markets, because we're going to start expanding outside and become more Midwest, and we need to learn some things. So that's kind of what's on our horizon moving forward.
Certainly an interesting time for our industry, coming off 2 record years in a row, and really an unexpected extreme run up in rates that's caused catalyst to a really, really different type of climate. But Ryan, hearing how you look at this climate, hearing the ways that you're thinking about strategy, the things you're talking about, and the way you're using this opportunity, no surprise that Green State has continued to thrive through it all, and expect nothing different as we move forward. And really appreciate you joining me again as the co-host this week.
No, I appreciate everything TMC does, and you guys are great, and always proud to be a partner, and I just love what you guys do, which is connecting people and with our vendor partners and our other lenders. And we love these Zoom calls, and we love your conferences, because that's where we can kind of connect with everybody and learn some things, because we don't have it all figured out. So appreciate it.
Good stuff. And we appreciate you guys as well, and appreciate you taking the time once again to co-host the last week of Mortgage Today. And to all of our attendees, thanks as always for spending 30 minutes of your week with us. We're here every Tuesday at 2 p.m. Eastern. You also find us on podcast, TMC Connect, or on YouTube, where we upload all the videos after we get done recording them. So until next week, have a great rest of the week, everyone. And thanks again, Ryan.
See you guys.
Take
Have a
care.
good rest of your day.